Welcome to the Abra Money 3.0 show, your guide to the future of all things money. One of the biggest obstacles for the mass adoption of cryptocurrency is the ease of actually getting it. In this episode, Abra CEO and founder Bill Barhydt sits down with CEO and founder of Simplex, Nimrod Lehavi, to discuss the complexities of turning fiat into crypto and how Simplex is helping to solve this problem by allowing people to purchase crypto with a credit card. Before we get started, a quick disclaimer.
The information presented in this podcast is provided for informational purposes only and should not be used or construed as an offer to sell or a solicitation of an offer to buy any of the financial assets discussed. This report should not be construed as advice designed to meet the particular investment needs of any investor. Any opinions expressed herein are subject to change. Neither Abra nor any other participants in this podcast make any representation as to the suitability or appropriateness of the financial assets for individual investors. Investors must make their own determination, either alone or in consultation with their financial advisors, as to the suitability or appropriateness of such investments.
So with me today, I have Nimrod, CEO and founder of Simplex. So disclosure, Simplex is a partner of Abra who helps us in the area of card processing for customers who are purchasing Bitcoin and Ether through MasterCard and Visa. And we're going to get into all of that. It's been an awesome week for Bitcoin. We've seen a price explosion. We saw the Facebook/Libra announcement where Facebook is now getting into the crypto space. And of course, purchase volume and transaction volume across the entire crypto sphere is reaching record highs again. So we have a lot to talk about.
Yeah, everybody's smiling this week.
Yeah, exactly. So why don't we start off, Nimrod, just give us an overview of what Simplex does, and also I would love to hear about your personal background and how you got into Bitcoin.
So in my background, I was a developer, and later on I had a software company providing outsourced services for about 15 years or so. And then in late 2012, I read the Bitcoin white paper and was, moved by it. It seems like almost like code poetry. Elegant solution. Really loved it. Really wanted to do something in this world. Usually the first move is to try and buy some, right? But it was crazy hard to buy some. It was almost impossible. The only way that I found was to actually wire money to someone whom I don't know, and hope for the Bitcoin to arrive. And, being an Israeli, I didn't really think it was a good idea. And it seemed ludicrous that you can't make a purchase with a credit card, because after all, it's a digital good, at best. At the time, it was considered the holy grail. Nobody was doing it at all. So I started working on it, managed to buy some, just meeting face-to-face, a couple of guys. Started working on it in 2013. Snatched my two co-founders out of PayPal, and we formed the company together early 2014. We launched the service initially in December 14, and up ever since.
And how many countries do you operate in today?
Almost anywhere, except the FATF restricted countries. We operate almost everywhere. We're working with most of the biggest names in the industry. I usually say, except from Coinbase, usually anywhere where you can make a purchase with a credit card, it's through Simplex.
So when people think of crypto or Bitcoin and credit cards, I'm guessing the first thing that most people think of is fraud, right? Or one of the first things people think of is fraud.
Most likely.
I'm guessing that this is a huge part of your day is dealing with the trials and tribulations of credit card fraud.
Absolutely.
Right? You can buy Bitcoin and in theory transfer it anywhere in the world. So if it's a fraudulent transaction, the money's gone before you might even know about it.
Yeah, exactly.
So talk about this. How do you deal with this at a global scale?
So first of all, I never sleep.
Well, okay.
So kind of organizing the issue, the problem here is that, let's say I stole your credit card and I make a purchase of Bitcoin in some exchange. The exchange is sending me the Bitcoin, and then you find out, you call Visa or MasterCard, say, telling them it wasn't you, and you get the money back, and the guy who's got stuck without the funds is the exchange, because they already sent the Bitcoin. So that's the core issue, and I think that's the reason it was never implemented before Simplex started doing it. I think the core ability of Simplex is indeed this fraud mitigation. My two co-founders worked in PayPal in the high-risk transaction monitoring whatever department in Israel. So their entire career is revolving around how to manage fraud properly.
Now, what PayPal will often do with a high-risk transaction is just not let you access the money for some time frame.
Yeah.
You don't do that.
Nope.
So what's the difference? How are you able to do that with what's probably a higher risk transaction than what they're dealing with, where they just freeze the money sometimes for 30 days, which drives everybody insane?
Yeah, and make it a bad service. I mean, so before we started working, before we launched the service, we were contemplating how exactly should we do it, but it became clearer and clearer that the delays should be zero. The whole point of working in crypto is the fact that you have a superior financial system, not just as bad a financial system. And this gap that we bridge is the value that Simplex brings. I think that PayPal in general are very risk averse. They have a lot of risk that they would rather not handle. They have a lot to lose, so they just step away from the risk. The average transactions there is much lower, and they would just remove the seller protection feature from more and more verticals, more and more merchants, whereas we prefer to take it because that's the value we bring. We collect something like almost 1,000 attributes per transaction in real time and manage everything around that.
So let's dig into that. So walk us through what happens when you actually say, okay, I want to buy Bitcoin with a credit card, and I give my number, and is it just an approval? I mean, walk us through all the steps that basically are going on behind the scenes, because I think people are genuinely confused as to why there's so much fraud in this space, and how it is that you're able to deal with this.
So the reason that there is so much fraud, or why is cryptocurrency the highest fraud risk vertical, is because it's, first of all, it's 24/7, 365. It's global, genuinely global. There's no shipping address. Everything makes sense. Like there's this old story about transactions with PayPal that, if you see a card that was issued in the States, traded in, making a purchase in Nigeria, let's say, in non-office hours, it's most likely a stolen card. But what if it's an American on a business trip in his company branch in Nigeria? And it's a very simple way to look at the problem. I mean, there are so many arguments that are being chugged into the AI system that we've developed. None of them on its own can say if it's a fraudulent transaction or not. It's kind of everything together. But, let's say if it's the IP address doesn't match the billing address, it's a flag. If your email is too new, let's say you created the email yesterday, it's a flag. If you have different languages installed on the browser than the language that you're using right now, or the billing address on the card, it's a flag. There are a bunch of things.
Wow.
Yeah,
Wow.
It's crazy deep.
Now, in the card ecosystem, it's really complex, right? The average consumer has no idea how many people are actually touching a card transaction, right? You have the consumer, you have the issuing bank, which is the bank that actually gave you the card, you have the merchant, you have acquiring bank that actually acts on behalf of the merchant, you have the network that routes transactions between the acquiring bank and the issuer. In these transactions, you're the merchant.
We're actually the payment service provider. It's
Okay.
slightly different in the US than it is in most of the rest of the world.
Okay.
In the US, it's usually gateways,
Right.
working
Gateways,
with the merchants, and in rest of the world, except from Korea, which I know is very similar to the US model, everywhere else, it's the acquiring banks working with the payment service providers, working with the merchants. And we're the payment service provider. So we're licensed as a financial institution in Europe. Hence, we're able to provide these services globally through that license. And it's a crazy scheme. So we're working with 5 or 6 acquiring banks, so you always have redundancies. So as you can imagine, even with your experience in the payment world, acquiring banks are not the most stable thing. Usually, if they think that you're handling too much risk, they'll just tell you don't come next day.
Right.
It's as simple as that. They'll just shut you down.
Wow. And so one of the things that we hear a lot about is that it doesn't work for me because I want to make a large purchase, or the limits aren't good enough, or this bank is blocking the transactions. I mean, is it a moving target?
Constantly.
Yeah.
constantly, and I was a tank commander, so I know it. I know how to shoot a moving target, but still, it's
Okay.
banks keep changing, acquiring keep changing, they keep changing legislation, they keep changing regulation, they keep changing enforcement.
Yeah.
We're trying to be as flexible as possible. So we have pretty high limits. We have like 20K a day, 50K a month per user. We are, as I mentioned, I think earlier, we're adding the sell side, the flip side, so you'll be able to sell crypto and take money to the credit or debit card, which you hold. The regular one, you don't need to issue a new one just for that.
Yep.
And, someone asked me, like, why are we creating the company that will annihilate the need for such a company in 10 years? And so we have quite a few products that we're going to launch in the next year, 2, 3, that will not only facilitate the transition from traditional finance to more of the crypto world finance, but also support the activity there.
So if you were to go 5 years out, what is your ultimate vision then for Simplex? I mean, if you're right, then there should be way fewer people doing credit card purchases in the future because
I don't think in 5
Okay.
years. So in
you
20,
think it'll take longer.
way longer. I think when I started my way in the crypto world in 2012, 2013, I was certain it's going to take 5 to 10 years until like mainstream adoption.
Yeah.
How naive was I? So 5 years passed, 6 years passed. I think it's going to take 10 to 15 years until there's proper adoption. Not even like everybody has it. So I think we're just in the beginning of the race, because if you look at regulation, basically nothing changed.
Sure.
Bank attitude, nothing changed.
Yeah, I have this theory that in general terms, and I think Bitcoin is another just example of this, we tend to overestimate the adoption of technology in the short term and then underestimate technology adoption in the long term. And I remember in the mid 90s, people said, "Hey, I have no need for the internet," right? And now it's in everything. You don't even think about it, right? So interesting. So this other theme that I wanted to touch on is this idea of the stablecoin, right? So a lot of people use stablecoin as on-ramps and off-ramps into crypto.
Yep.
And of course, Facebook's announcement last week was clearly a form of stablecoin. And how are most people, like if you use Tether, which is the most popular stablecoin by far, how are most people getting the Tether, and how does that relate to your world?
So usually they still, I'm guessing that most of them are either large institutions or crypto heads that just had tons of crypto and they wanted to step out of the volatility and convert it. I think that over time, the next product that we're going to launch in, I'd say like 6 to 8 months, is a Simplex account, which will enable all the integrations that we have. All the users there will be able to hold their fiat with Simplex. Simplex being a non-crypto company, not touching crypto at any point, highly licensed, completely regulated, touching only fiat. So basically, any user working with any of the partners that we have who wants to handle his fiat on the platform will be able to do that.
Very interesting.
So basically, anyone with Abra, for example, wouldn't need to be regulated in the old-fashioned world. You wouldn't need an MSB license. You wouldn't need an EMI license in Europe. But your users, through the integration with Simplex, will be able to hold a fiat account. So I think that stablecoins are kind of an anomaly. I don't think they're really required. I think they'll be gone. Maybe not. Simplex won't be the biggest driver to do that, but I think it's something that should and will be sorted out over time.
So that's an interesting comment. So you think that long term we shouldn't have a need for a stablecoin model,
Exactly.
Yet the largest player in online media just announced probably the biggest project related to stablecoins.
So much to say about.
Okay,
Facebook.
so
that'll be like
so let's
2
get
hours.
no, let's get into
podcast.
it. But what is your take on the Libra announcement and how it affects our world?
So I think we've noticed the effect. It took us from 7 to 11, like in 3 days or something. So, as Simplex is serving mostly retail users who are making purchases with credit cards, it's usually a trailing market. And it's the biggest effect is not the Bitcoin exchange rate, as many people think, but actually news. So more news, more new users are making purchases. And I take huge, enormous pride in the fact that we're introducing new people into crypto, by millions of dollars per day. And, we're bringing the revolution. And I think that Facebook, first of all, I think that to some extent, it was a reaction to the fact that Telegram are going to launch before the end of the year, right? The terms of their ICO, that they have to launch the platform.
Or they have to return the money, actually.
Exactly.
Right?
So they have to launch by, I think, October or November. And
in the meantime, nobody really knows what they've created or if it's going to work or...
No comment.
Okay.
But I think that was one of the drivers for Facebook to start actually pushing things forward.
Right.
Before time, before they're organized, before they got the green light from the regulators. I mean, look at the effect that like 3 days after the announcement, US regulators, French regulators, German regulators told them like over my dead body. Basically.
So actually, I have a slightly different take on that, because if you actually look at who was doing the over my dead body comments, it wasn't actually the regulators, it was mostly legislators. So I've spoken to the team quite a bit at Facebook, and it seems that what they've done is they were very clever in making the rounds globally and talking to the regulators. And in theory, the reason the regulators exist is because they take legislative laws and whatnot and turn them into policy. And in theory, the legislators should then have no part in the process, right?
In theory.
Now, that was completely wrong. And I think that's where they underestimated the reaction. I think they understood the public backlash given all things privacy and the fact that nobody trusts Facebook right now.
Yep.
But the reality is that's not the average consumer. The average consumer actually doesn't care when it comes to privacy and all that stuff.
You know, sheeple.
Right.
They don't care about anything.
Exactly, right? But the legislators are in a different, kind of frame of reference or state of mind right now. And I think that's where, I don't know that maybe I'll backtrack a little. I don't know that they necessarily underestimated the reaction. I think they realized that they didn't want to deal with that reaction when the product was ready, right? And that it made no sense for them to release a product on day one and be dealing with presenting to Congress on day 3.
Yeah.
And if it's going to take us 7-8 months for this storm to blow over, let's deal with the storm now, get it out of the way, because the public's not going to care anyway long term.
I think that, if you look at Europe at least, I think that the European legislator have demonstrated they don't mind, putting their foot down on the large corporations. Like look at the right to be forgotten in Google.
Right.
They shoved it down their throat.
Absolutely.
And they would do the same. And the
But
Facebook,
Google is still operating though. They didn't shut Google down.
No, of course.
They just
Facebook
gave
is not
them
going to be
different set of
shut down.
rules.
They just couldn't operate with Libra in Europe. So I think it's a combination of a few issues. I think that, the legislators and regulators would have loved to kill Bitcoin because of the huge threat on governance and issuing currencies. And if Facebook decides to issue their own currency, you can become a citizen of Facebook. You can just eliminate all your ties with the local.
And what about the idea that it's a Swiss association with dozens of members where they're one vote?
Yeah, I don't buy that.
Okay. I mean, buy it in the sense of you don't
I
believe
don't
that's what they've done? Because it does appear that's what they've done.
Yeah, but still, first of all, look at the other parties there. It's not exactly the companies that you would, trust the most with your information.
I would say that there's probably a lot of consumers that would not only agree with that, but also disagree with that, because if you think about, your processor for Visa and MasterCard, they're 2 of the founding members.
Of course.
Right? So PayPal, right? These are companies that process trillions of dollars a year in transactions.
Yeah.
So someone's trusting them.
It's not a matter of trust. You have a bank account. You trust the bank?
Yeah,
I don't. I have a bank account and I don't
trust the bank in the sense that when the shit hits the fan, when things go south, are they going to be there for me? No. Because when there's a run on banks, by definition, fractional reserve system breaks down.
Yeah.
I trust the bank when the system is not breaking down, but I don't leave all my money in one bank for that reason, right? And I don't think that people with any reasonable amount of money should either.
No, I think it's a very good point on the Facebook side. Facebook also has demonstrated in the past that they cannot be trusted with your personal information. So now you're going to trust your financial information with them?
Sure. Or decide that mentally it doesn't matter to me, which I think is where most consumers are. Most consumers actually say, do I trust Facebook?
No, but
not.
still.
But does it really matter? Probably not.
Most people, you ask them what's their password and they'll tell you.
And we deal with this at Abra. Exactly. We deal with this at Abra all the time. People realize that, privacy and trust matters after they've been hacked. Right? We get so many new users at Abra.
Even then, not enough to do actually something about it.
Well, and crypto is different, right? Because if you've had an account on Coinbase that's been hacked via SIM jacking or whatever, then you come to Abra and say, well, why didn't I know about this in the first place? And the answer is, well, unfortunately, you really weren't paying attention
that
to the
was the
difference
price of
between
education.
Exactly, the price of education between a custodial and a non-custodial system. And unfortunately, most people don't care about that difference until they've been hacked. Interesting. So, okay, so let's put our personal feelings aside. I mean, what are the likely benefits of having this other stablecoin? I mean, you mentioned that the halo effect around people getting into Bitcoin, which is great, but I don't think that's going to be the case a year from now. So what's the potential benefit of having
Of Facebook?
Yeah,
I think
of Libra
it's
as a
amazing.
coin.
I think it could be amazing. Just first of all, just introducing almost 3 billion people to the concept of cryptocurrencies, just shaking down the banking system. If you look at cryptocurrencies and blockchain technology, as much as I dislike the term, if banks will start operating on such an infrastructure, it will be similar to the revolution of telephony companies working on, start working on voice over IP. They still charged you for a decade like they weren't, but they already were. That's how they became such huge companies. But if this move will just push the banks, and your price of managing your own financial affairs will drop by 100x. That's amazing.
Right.
If you can bank the unbanked,
yeah,
a lot of the things that I think most people who entered the crypto ecosystem in 2012, 2013 were so eager about is that less of making a quick buck via an ICO, but more of changing the financial ecosystem.
Right. Interesting. I think it's going to be a fascinating year. I think it's going to be a fascinating couple of years, partially because I think the Libra announcement is really premature from a technology perspective, and I think it's actually going to be more like late next year before this is even released. I think they are underestimating how long it's going to take to get this out the door, at least publicly anyway. We'll see. I think it's fascinating, and they've got over 100 people working on it, they've said now, which is astounding.
There's a pretty big Israeli
probably
team.
More than our two companies combined, right?
We're actually 100 people.
Okay, and we're about 50, so we're getting there. So let's come back to Bitcoin. One of the things we think a lot about Abra is Bitcoin's ability to scale, to deal with hundreds of millions and eventually billions of consumers. When you purchase a Bitcoin with a credit card at Simplex, I mean, it's basically it's an on-chain transaction. In order to get the Bitcoin to the consumer, it has to be, right? And so, I mean, between us, we're doing a non-trivial percentage of on-chain transactions now, I would assume.
Yep.
How do you think about that going forward, and what are the implications for your ability to scale a business?
So I think that I believe in the future of a multi-currency ecosystem. And I think that Bitcoin will remain a kind of a gold standard. So large organizations, banks, large transactions will go through it. So I don't think there's an actual scalability issue with Bitcoin. I think you'll have other currencies for other activities, whether it's Ether, EOS, or whatever your flavor is. So I really don't think there's an issue with Bitcoin scalability. And right now we're offering purchases of I think 10 currencies directly, but it'll grow to hundreds in a couple of months.
But if you had 50 million people who wanted to buy $50 worth of Bitcoin, that would be a problem for you, right? I mean, you'd probably have to settle once a day in batch as opposed to in real time, right?
That could be the case. I hope we'll get to that problem. Right now it's less of an issue.
Yeah. Do you think Lightning will work?
I don't know. I don't have enough information about that rather than other solutions. Again, I don't really look at Bitcoin scalability as an issue, so I'm less interested in the solutions that will enable you to make a coffee purchase with Bitcoin. I just don't think you don't bring your oil barrel or your ounce of gold to the mall.
Okay, fair enough. Where do you, in that light, where do you see most of the volume that's not Bitcoin? Obviously, I assume Bitcoin is the
Bitcoin is by far the biggest.
Right,
Ether, Ripple, those are the next runner-ups.
Got you. You mentioned that you support BNB now, which is Binance's token, and you've seen a lot of growth in BNB. That's really interesting. And is that global? And do you know if it's traders, or do you think it's just people speculating?
I think we've ran a survey within our client base, and most of them see themselves as traders. Yeah. Which is interesting because the average amount is less than $1,000.
Interesting. So let's do the math on this, right? So the average purchase price for, I know we're running right now 4% is the fee. effectively to use Simplex to get Bitcoin and Ether. Obviously, people are doing mental math, right? I mean, there's kind of two schools of thought here. One, I'm doing something with the Bitcoin. Either I'm going to a gambling website or buying digital goods, or something where I don't mentally perceive that the 4% matters, or I'm mentally in this model where I'm assuming that Bitcoin is going to go up by so much that 4% doesn't matter.
10% a day is good.
Well, yeah, okay. Although I'm not so sure we should assume that that's going to be the modus operandi as it has been the last few days. But we're recording this in a week where I think Bitcoin was up 25% maybe, which is incredible. So how do you think about that math, and how do you think that will play out over the next couple of years?
I think that usually it's market education with regards to actual costs of processing, which most people are not aware of. Like if you're buying shoes on Amazon, you're still paying, anything between 2 and 5% is paid to the credit card companies. People are just not aware of that.
But people don't use Amazon to buy euros if they're in the U.S.
That's true.
Right. So
that's true.
I think it's a slightly different mental mindset, right? So it's easy for the shoe manufacturer to build the cost of payment into the shoe, or the middleman at least into the shoe.
I think that the friction is in buying Bitcoin is still so high that I think it's only an addition. Like you need to open a wallet, you need to find a place, you need to decide between the bazillion number of cryptocurrencies around there, like which one are you going to trust if you're a noob.
Right.
And you don't necessarily understand. Statistics say that you do understand usually that you need to buy Bitcoin. But if you don't, then how do you buy? Where do you buy? What's the exchange rate that you accept as the quote? And then on top of that, just the additional percentage for the payment. I think it's,
Now, what do you think you're mostly competing with? Do you think that it's like local Bitcoins, or do you think that it's just people using an exchange/order book? What are you replacing in the minds of most of the people who end up using Simplex?
I don't think we're replacing anything. That's why I think it's the biggest challenge is also when I'm pitching to an exchange, it's not to substitute some other service. It's basically you need to approach retail, and you should stop. It was the worst year was naturally 2018 when everybody kind of clenched and say, okay, we're only serving institutional, and I had to fight with every exchange telling them you have to serve retail users, otherwise the ecosystem won't grow. Mm-hmm. And otherwise, it's just a snake biting its tail. It's you selling me Ether, selling him Ripple, selling me Bitcoin.
Yeah.
That way the ecosystem doesn't grow.
Yep. All right, it's kind of a boring and annoying topic for some, but I think it's really important to understand in the context of this ecosystem. So let's take a step back. I want to understand how you guys think about compliance, and given that you operate in pretty much every non-sanctioned country in the world, compliance and dealing with regulators all over the place has got to be an enormous undertaking. I'm assuming that you get probably inquiries from U.S. states, you get inquiries from other governments, and at the same time you've got to make everybody happy. So how do you deal with that?
So I think it's mostly the way you look at regulation. And it's very much unlike the way Koreans look at regulation, for example. Like I heard this from one of our investors in Korea. He told me that the way they look at something, that if it's not allowed, you don't do it. We look at it, if it's not forbidden, then we do it. So that's one very important notion. But we're very strict when it comes to what we decided as a policy. For example, there are a few exchanges who still enable you to make deposits without KYC. We don't allow any transaction without KYC. And I think that, in general, we try to look at the regulator as someone who's not trying to, stick a branch in our wheels or something. It's more something that we're looking to cooperate with them and work with them. And I think it worked pretty well so far. It was one of the guiding decisions to be a non-crypto company. The fact that we don't touch crypto, we don't hold crypto, we don't transact in crypto is an enormous help, because there are at least regulation in place.
Yep. And how much of the team is actually focused on this topic versus growing the business and dealing with new products? And
most of the team is revolving around the fraud mitigation system.
Mm-hmm.
I'd say the regulatory side, compliance and all that is less than 10%.
Okay. Okay.
And the risk side is 60% or so.
Yeah. And is it like, okay, at the beginning we were able to squeeze a huge amount of fraud out of the system versus others, and now it's like we're dealing with the long tail of fraud?
No, not at all. It keeps changing all the time. There are new attack vectors on a daily basis. It's the system never sleeps.
Yeah,
It's
and
like,
you're dealing with all this dark web kind of, I
all the time,
stole
all the
credit
time,
card
all
numbers
the
kind of
time.
crap. And
I have a slide in my deck, which is a screenshot that we took from one of the carders forum on the dark web. That one of the guys say, okay, I have 10,000 credit cards with identities and everything. Where do I go and buy Bitcoin? So someone tells him, go to the Simplex website, check their partners page, and go someplace else.
wow, right. And so, I mean, given that it's not really like a mathematical thing, right? I mean, there's no formula for how the dark web works.
Yeah.
Right. It's a lot of brute force issues, right? And
Yeah, but I think that, we think like hackers. We keep on researching new attack vectors, seeing how... I mean, I think that everybody in the company are paranoid. But, there's a quote that the fact that you're paranoid doesn't mean that nobody's chasing you.
right.
So, I mean, I don't think we were victims of any successful attack, and we got shit ton of spear phishing on especially the founders and the executive teams, like, all the time.
Yeah. I hadn't thought of this before, but I mean, I'm sure you have. I mean, culturally, Israel seems like a potentially uniquely qualified place to have a company like Simplex, just given
absolutely.
the cultural issues that you
Absolutely.
deal with around security and the whole kind of mentality of,
Absolutely.
of
I
the
had
history of the country.
a
Right?
few years ago when we were raising funds, I had discussions with a few big VCs in the Valley, and their second question was, okay, when are you moving to the States? And my answer was never. Israel is the best place to have something which is the nexus of technology, fraud mitigation, and payments. These are, ecosystems which thrive in Israel.
Yeah. And why do you think that the mentality is so much better for doing this in Israel versus even potentially in the US or the UK or Germany, for example?
First of all, U.S. is a big place, Maybe ask if, in Israel or Silicon Valley.
Sure. Okay, Silicon Valley or New York, but you get the point.
I think, I think Israel is getting a good run for the money when it comes to Silicon Valley. I think that Israelis are a bit more hackerish, so to speak. We always try to find a way to make something work. That's why I think, financial fintech, or even more specifically payment industry in Israel, is very strong, because we always think of a way which is not illegal to do stuff.
Gotcha. And you were a tank commander, did I understand you correctly? Wow.
There's a mandatory military service in Israel, so I was a tank commander.
What does that actually mean? What are you actually doing as a tank commander?
I was in the tank, so it's that's like a complete diversion of the conversation.
Yeah, that's okay.
So
That's a segue from Israel.
I started in flight course. I was horrible in flying. I got kicked out, joined the armored forces. You go through the whole thing, like you start as a...
So they said, let's keep this guy on the ground.
No, I was just too big to fit inside inside the tank, so they let you be a tank commander where you're half out.
Right. Yeah, but they're kind of the first ones to go, though,
Yeah,
right?
very much. You're supposed to put the dog tags in your mouth.
Okay. Well, I'm glad it all worked out in the end. So, and,
can't complain.
Yeah, exactly. So, and just coming back to Simplex then. So you guys have also raised a fair amount of venture capital, I think.
Overall, up until now, we raised only 18 million.
Okay.
Which is not so much for, one of the more veteran companies in this ecosystem. We've been around for over 5 years.
Yep.
We're serving, we're partnered up with, on the exchange side, it's Binance, OKX, Huobi, DigiPhoenix, Liquid, I don't remember all the names. And, on the wallet side, it's Abra naturally, Zappo, MyEther wallet, MyCrypto.
Wow.
Pretty much everyone.
Yeah.
Yeah, and still expanding.
It's fantastic. And what are you most excited about in terms of what's coming next for the company?
So I think that the sell side is extremely interesting. I think that, up until now we were supporting only getting in, and I think that one of the issues in getting into crypto is knowing how you get out. So as a noob, maybe I'll be more, I'll feel more comfortable buying if I know I can sell the day later. and you get the money back. So that's one very exciting thing. And the other one is the Simplex account, which I mentioned earlier. I think it'll open up exchanges and wallets much more, because they wouldn't. Right now, almost every crypto company is uncertain with regards to regulation, because there's no regulation in place for most of the crypto businesses. And once we take care of the fiat side, which is extremely regulated, but will be under our regulatory umbrella, you can operate in crypto land without touching fiat at any point, and you can do whatever is legal and right and correct and comply with, self-compliance.
Yeah.
But still, you don't need to bother with all the crap that fiat brings with it.
Very interesting. And how many countries would support the idea of enabling, let's call it a card-based withdrawal?
Pretty much everywhere, again, except the restricted countries.
Yeah.
Right now, as it's being launched, it's without the US to start with, but then it's going to expand to US as well.
Gotcha. So speaking of the US, one of the issues that everyone faces, and this isn't unique to Simplex, is that certain banks block crypto transactions on cards they issue. Is that a moving target? Is it kind of stabilized? Is it getting worse? Is it getting better?
It's not always correct, and it's usually only for the credit cards, not the debit cards. So debit cards weren't harmed. I think it's kind of a legal debate in the upper levels in the bank, because there's a precedent that the court in the US decided that spending your money is a form of exercising your freedom of speech. So they can't really block you from buying anything which is not illegal by using your debit card, because that's the money in your account. With a credit, they can claim that they're providing you credit, hence it's not your money.
Interesting.
But I don't know. I mean,
So-
if you
so
want
to
to
be
take
clear-
it to court, it's going to be.
So to be
interesting.
clear, though, if I know Chase, for example, I have a Chase card, and I use my Capital One instead, because that works. It's like you said, it's a debit card. So you're saying that if I use my Chase debit card, I don't have one, but if I did, it would work.
Yeah.
Very interesting.
Yeah.
Yeah.
Debit cards are not blocked.
Yeah, fascinating. Look, I could go on for hours about the on-ramps and off-ramps for crypto. I think it's a fascinating conversation. I think you've built an awesome business. I think you found a real need in the market, and I think you guys have built some significant efficiencies into what should be a very inefficient market. So kudos for that. And
Thank you.
On behalf of the Bitcoin ecosystem, we're really glad that you guys are out there and you're solving this problem. And we're really excited to see what comes next with Simplex. So keep up the great work.
Will do.
Yeah.
Thanks for having me.
My pleasure. Let's do it again in a year or so and see how the business is doing and compare notes and we're all kind of building this ecosystem for Bitcoin together, and we've all got our roles to play. So thanks for listening in, Abra's Money 3.0, and we'll see you next time.
Thanks for listening. To find out more about Abra, visit abra.com and stay tuned for more episodes to come from this podcast. Be sure to subscribe to the show wherever you listen. This episode featured music by Alex Baroza.